You want to understand direction. You got to understand where everybody else is all eager and excited about getting long or getting short. In this example, getting long, when you understand, and you should understand profiling enough to know where there's an overlap of a level or some setup for a particular group, and profilers are a popular group where they get all excited about being long or being short, playing a level, and they're wrong, and being able to key off where they're wrong. So we talk about step one, step two, step three. What gets you bullish or bearish? Is it fundamentals? Are they, or whatever they are? There could be all kinds of reasons, some good, some not, that get you bullish or bearish. In this particular case, there's a couple things that get you bearish. Number one, the amount of rotations that we have at a particular level. All right. Number two, right underneath that level was a popular profile level. It had a POC and a value area low and a value area, all kinds of stuff. Almost too good to be true. And so what happens is when you have a popular support level for the rest of the market, for some group of traders, they're all going to want to try to play it from the long side. The problem is, if it works, it generally doesn't fill them. It goes right above them and then leaves, right above them and then leaves. And they're all sitting down there begging to get long, but the price left without them. And that's if it works. But they're sitting there on the railroad tracks when it doesn't work and they get picked off. And you generally can anticipate a move like this to the downside and a breakout opportunity. Number one, because it's a consolidation box, which is a way to prepare for a step one, step two. And then you're going to see all of this light up, and I'll show you something on our OPP as a trigger moment. But to anticipate why it's going to move is more important than seeing it as it moves, or certainly after it moves. And most people are not proactive. They're always reactive. They're always slamming on their brakes well after they see the person in front of them slam on their brakes, instead of anticipating what could happen in front of you, instead of always just reacting to what already has happened. So there you have a popular level at around 81 and a box setting up above it. And what's too good to be true is not that that level is going to work. It's that it's not going to work. And you've been paying attention and focusing on making this prediction. So when we play it, you're anticipating a downside breakout. You're anticipating all these grays to light up and the whites to thin out. You're anticipating these longs to get picked off. Let me back it up because it just happened as I was talking. You got all this green and this vertical lighten up. These numbers go heavier on this side than that side, and this white resting bids start to shrink up. So there's many more sellers than there are buyers, which generally it's got to be the dynamic for downside. All the green lights up. You're getting this gray to come in. You're seeing some moments right in here when you get used to watching this, where you see when the white creeps up, they crack it right away, and a bunch of gray refills right at, like right there, right at the best offer. When you get that, it usually continues pressure that already exists from right there. So now all these profilers that loved 81, but don't know how to read a market like we do. We have a lot of profile people in here, but we know how to read real time to disqualify and qualify something like this. They all get long in here, and they're part of the reason why the market breaks out and stays weak, because after you're long, you now are a seller to exit that long position. And so fundamentally behind this is what other people are doing, where they're getting loaded up, the consolidation box, the breakout, the fact, and this is another thing that we talked about all day, was we opened up strong. When we open up strong and we start to sell off, there's a moment where you get everybody, because of the bullish open, holding on to that bullish opinion. And anytime people have an opinion, they have a really tough time at letting that go. So you got, for the right reasons, people were bullish maybe coming into today. But 15 minutes after this open and 30 minutes after this open, we got some nice downside. And when you open up strong and you start to bleed into the prior day's range, that's the definition of a reversal. That's the dynamic of what makes a reversal. A reversal becomes a self-fulfilling prophecy. Too many people are stuck long all the way down, and they're contributing to the selling that makes it go down. And you see the follow through up here of this market. And if you're not seeing it, Well, you weren't anticipating before it went, and understanding that too many longs equal too many sellers, downside's the right side. And so we take this video back a few steps here. You could see right before it broke down again in here, you got some green that popped out. Right there, popped out. You got a big buyer rejected. You got this gray filling in right at the best offer, just keeping pressure on this market. And we had some continuation. That's how you read, anticipate a breakout, understanding, first of all, what and why markets go up or down, and then getting all retail profilers trapped at the most popular profile level of the day or a profile setup. I could tell people that till I'm blue in the face, and most people, except us in here, won't either get it or they'll always be stuck with the sheep and a herd. Trust me, unless you're every day underscoring the fact that you don't want to get in front of a herd, but you want to identify it and not be part of it. If not, and you're not in a repetition fashion going through that, the herd's a magnet for a reason. And then you become part of the herd. You become part of conventional wisdom. That's the path of least resistance initially.